Welcome back, my friends, and thank you for tuning in. If you are interested in receiving the newest, latest information in the world of precious metals, including the economy, geopolitics, and anything in between on a daily basis, then make sure you click subscribe because I will do just that. We have some very interesting news that came out yesterday. Bank of America expects declining silver inventories to, quote, make the deficits count, aka the silver shortage will start affecting the price. Right now, we actually see silver doing extremely well. We have silver up to 28.31, bouncing all the way back. Some people were actually doubting silver, saying that when it was 26.50 that it could drop much lower. I heard people say as low as $22, $23. I definitely was disagreeing with them since we just broke past 12-year highs. There's so much stability that has been built at higher prices, and silver breaking past 12-year highs to 32.50, it's a lot harder for it to just drop all the way back down to 23 when it just did that. But there's much more to this video than just Bank of America expecting declining silver inventories to make deficits count. We'll also be going over FX Empire writing an article yesterday, will rate cut hopes ignite a silver rally? So we will be going over a couple different articles, and if we have time, we'll actually be going over another article that came out yesterday, silver set to shine as brightly as gold. This came out from Kitco. So yeah, we have a lot of stuff to talk about. Make sure you subscribe and click the bell if you want news like this on a daily basis, plus lots of other types of content as well, from podcasts to live streams, giveaways, and anything in between. So with that said, let's talk silver. Bank of America expects declining silver inventories to make the deficits count. The Silver Institute shows that the silver market has been in a deficit for the last 5 years, and during that time, we've seen substantial decreases in global inventories. And this is exactly why people say that silver has more opportunity than gold. Gold on steroids, some say. Steroids does have negative side effects, and that's why silver is much riskier. It's more volatile, but calling a safe haven metal risky is extremely contradicting. Now, my name is Silver Slayer, not Gold Slayer, for a reason. Gold is also a great, asset to store your wealth with, but silver just has more opportunity, and that is because it's much more useful, and there's way less of it. Most silver ends up in landfills. Most gold is recycled, re-scrapped, reused, because it's mainly used for coins and jewelry and watches and necklaces, so it gets remelted, re-scrapped, reused, where silver, that's not the case. Plus, there's been a huge drop in production the last 5 years, with demand rapidly rising within the last 5 years. So low supply, high demand pushes the price up. You could try to suppress the price all you want, but the inevitable will happen, where you cannot suppress the price with something as useful as silver. If it was gold, which doesn't have as many uses, then you might be able to pull it off for a longer extent of time, a longer period of time. And that's what Bank of America is saying. It's starting to catch up, which, so let's keep moving on. This makes sense. The metal has to come from somewhere to meet the shortfall, yet with no resolution to gap in sight. And that's another interesting part that I've been trying to look at is, well, where are they going to get it from? Either mining innovation, which I've been interviewing the CEO of a silver mining company who digs it out of the ground himself, Sean Kuhn. So there's mining innovation. There is taking our silver, recycling, which doesn't even put a dent in the amount. I mean, we're 770 million ounces in the red in the last 4 years alone, so recycling's not going to do anything. Or space mining, which isn't going to be happening anytime soon. So that's where we could get it from. There's only so much silver in the Earth's crust, so mining innovation isn't going to do much. They're not going to take it from us, and even if they did, they're not going to be able to fill the amount of silver we need. So there's no solution in sight. It's not replaceable. That could be another option, but silver's not replaceable. It's an element on the periodic table that's the most highly conductive metal for thermal conductivity, electricity, and light sensitivity. And actually, instead of using less silver, they're actually starting to use more and more silver. They're using more of it now in these applications because it's so useful, it's so valuable that using more of it is actually worth it for the products to perform better. So we're just in a situation that is inevitably going to lead to higher silver prices. Now you can see right here, this is the Shanghai Futures Exchange Silver Vault, and it's going on from all these different dates. Their report also commented on China's surging silver consumption, which has continued to grow in 2024 as their solar production has again exceeded expectations. And yeah, last year they were expecting production to be up 2%. They were expecting demand to be down 2%, but it was flip-flopped. Now they're predicting to have we're predicted to have a 250 million ounce supply deficit this year. Last year, 170 million ounces in the red. The year before that, several hundred. We're talking about a situation that is unfixable. So anyone who's saying, oh, silver is just going to sit at 24, 25, it will never hit 30, 40, 50, you're highly underestimating the shortage. And I think that's where, or you're looking at it from specifically the same angle of gold. As you're pegging silver's potential to what gold's potential is. And that there's a whole other side of the coin, pun intended, to why silver has opportunity. China has already shifted to being a net importer of silver. And we've personally talked with one of the larger silver producers who told us about how Chinese smelters have been going directly to Latin American silver producers and offering substantially reduced treatment charges because they're able to take advantage of the increased premiums in China. Keep in mind that Bank of America research reaches the institutional market, and they've been writing about the deficit for over a year now. I've been making videos about the deficit since 2019, but anyways, it is nice that mainstream media is finally catching on. And with the gold and silver ETFs finally starting to see inflows in recent weeks after months of outflows during the rally earlier this year, we could see more money coming into silver, particularly with the Fed on the verge of interest rate cuts. Of course, if any of that investment's in physical form, that only further exacerbates the deficit, which is another really good point. If we're talking about physical, all the paper silver, that's only going to actually make it harder. That's how they manipulate the price, flooding the market with paper contracts where there is not that much physical out there. So all the people that hold paper thinks there, or I guess their contract says that there is, but there really isn't. If they try to turn it into physical, it would expose the facade. Now, another good point they mentioned, though, is particularly with the Fed on the verge of interest rate cuts. And that leads us to the second article, Silver Forecast. Will rate cut hopes ignite a silver rally? So let's jump into this article now. Silver hovers at 27.85. This was written yesterday. It's already up to 20 something. So it's already broken past another barrier of the 28 level. Silver hovers at that right now, or I guess yesterday, as traders await CPI report with potential rate cuts and Middle East tensions supporting prices. Market cautious on silver's direction. CPI report and Fed's rate cut decision could trigger significant price movements. Investors eyeing core CPI data expected to rise 0.2% monthly, a key factor for silver's short-term price outlook. U.S. Treasury yields dip as markets anticipate inflation data could signal a rate cut, boosting silver prices. Analysts predict silver could challenge 3-month highs if Fed confirms a 50 base point rate cut in September. So silver trading flat as markets await CPI report. Now remember, this was written yesterday, so of course that is not the case anymore. We know what happened. We have a sight into the future. And that's kind of, I do like reading these types of articles because we already know what happened. So it's nice to see their perspective on what they think's going to happen without, because hindsight's 2020. But when you're in the moment, it is a lot harder. And then you truly get to see, how things are affected, because in the moment, it's easy to have bias perspectives or biased opinions. You get to see how things, or how the psychology of the economy and everything happening affects people's decision making. Hindsight is always 2020. But in the meantime, if you're in the moment, like let's say, what is silver going to do by the end of the year? Which, by the way, I'm throwing a contest on the Secret Silver Society. Everyone gets one vote. Everyone can submit their price, so we're going to do by the end of August, actually, so in 15 days, Everyone gets to guess one price. Whoever is closest to what silver's price is on August 31st wins a prize. You guys can go join the Secret Silver Society. I'll post the link in the description of the pinned comment. Yeah, usually we also do raffles. Like every member gets one raffle ticket, and we go live and pull a bucket. So yeah, go join over there if you want. It's going to be really fun. I'm excited to see who wins or who gets the closest to silver's price. But yeah. Anyways, let's keep moving on. So interest rates and geopolitical factors support silver prices. The modest support for silver prices on Wednesdays, largely due to expectations of a potential U.S. interest rate reduction and ongoing tensions in the Middle East. However, the market remains sensitive to upcoming U.S. inflation data, which could influence the Federal Reserve's monetary policy decisions. Despite these supportive factors, low demand from China continues to weigh on the market, potentially limiting any substantial rally in silver. So that's another, it's give or take. But I don't think that, the last article we just read was talking about how China is actually importing, look, right here. Where's it at? They were just talking about Chinese smelters have been going directly to Latin American silver producers, offering substantially reduced treatment charges because they're able to take advantage. China is surging in silver consumption. So this article written yesterday says the report commented China's surging silver consumption, which continue to grow, has exceeded expectations. And now this article says low demand from China continues to weigh on markets. See how one article says one thing and the other article says the other? That's why you got to read more than one source, or got to check more than one source. Because if someone just read that, then they would have a specific, that you do your own research, right? I always say, do your homework, but if you are going to do your homework, make sure the answers are correct. Look at the numbers. The numbers don't lie. Actually the numbers do lie, like the Silver Institute. But so let's look at this short-term outlook. Bullish potential on rate cut hopes. In the short term, silver's price direction will likely be influenced by the Fed's decisions and any escalation in geopolitical risks, which we can almost expect to happen, especially ending the year. So now let's jump into this last article from Kitco that also came out yesterday. Silver set to shine as brightly as gold. So he shows this chart below. Let's see. I suggested some downside targets for gold and silver. Silver indeed fell, trading as low as $26.50 last week from its high to $31.75 on May 31st. That said, silver may be finding support right now as the gold to silver ratio starts to look toppy. Although the gold to silver ratio does seem to have a small amount of room to move higher, the probability is that silver turns up at its support as the ratio turns down as its resistance despite any volatility. So he's saying it's looking like the gold to silver ratio could go higher, meaning silver would be underperforming compared to gold. When the gold to silver ratio goes higher, that means gold's outperforming silver. When the gold to silver ratio goes lower, that means silver's outperforming gold. That's why, like when we saw it as high as 125 to 1 in March of 2020, that was around the same time that silver was $12. So although gold too has dipped since my last time writing, it shows remarkable strength. And by the way, to also reflect upon this last part, he's saying it's more than likely going to show silver holding support and starting to actually lower the gold to silver ratio. As he says, it does look toppy, so he's predicting that silver is going to keep holding on and probably start rising up a little bit. The rising wedge pattern is not particularly bullish, and the opportunity for a trade here may be sell some gold to buy silver. That does not mean I think gold is going down. In fact, an upside. And that kind of goes what he's saying is like, that doesn't mean gold's going down, but silver still has more potential, from the not only just immediate term, but the immediate term, but to the medium and longer term as well. But you never know, because we are living in crazy times, so expect crazy things to happen. But anyways, remember folks, make sure you subscribe, click the subscribe button. Also, I will throw in some deals right now if you wanted to take advantage of these lower prices. because it could be bottoming right now, so take advantage. I will throw in some of the specials from Miles Franklin. And also, if you guys wanted to join the Secret Silver Society, go click the link in the description. We do the members only discussion board is really fun. There's a live chat in there. And remember, if you wanted to try to win some silver, then all you have to do is get the closest number to what silver will be on August 31st. Are you going to guess $29.36? Because it will be down to the penny. Or are you going to guess $24.83? Each could be correct. I'm assuming the first is going to be more, have more chance of winning. But like I just said, we're living in crazy times. But at the end of the day, we all know what silver inevitably will do, and that's what you got to remember. Take advantage of these prices while they are still cheap, because someday in the future, you will be wishing you could go back and pay $28.50 for an ounce of silver. If someone's watching this video in the year 2029 and they're watching this video and seeing silver's price $28.50, they will be wishing they could build a time machine and go back in time to this date when this video is being recorded and buy all this silver from me at Miles Franklin. But anyways, yeah, on a serious note, folks, I love you all. Make sure you subscribe and stay tuned. This is Silver Slayer. I will see you guys tomorrow. Peace. We have the legendary 1 ounce silver Fight for America Trump bars for only $6 over spot, minimum of 20. We have 90% half dollars for only $2.50 over spot. We also have 1 ounce silver eagles for only $5.50 over spot. Philharmonics for only $3.10 over spot. And last but not least, we have 1 ounce gold American buffaloes for only $99 over spot. Email me slayer@milesfranklin.com, or you could call me 330-485-6172. And make sure you subscribe for daily silver videos.